Hey traders! There's this simple tool that can help you to identify where the market is headed, and maybe even catch those sweet reversal points before they happen. Well, in this video, we are going to discuss a super cool indicator called the Linear Regression Channel by Chart Prime. It might sound fancy, but trust me, once you see how it works, you'll always want to see it on your chart. I'm going to show you why the indicator is useful and how you can use it in your own trading to find better entries and exit signals. And I've got some real examples to show you how powerful this thing can be when the market gets tricky. So stick around if you're into smart tools that can help you trade with more confidence. And hey, if you happen to get any value from this video at all, just hit that like button, subscribe, and turn on the notification bell. It seriously helps the channel grow. Alright, let's jump in. Now, to get started with this indicator, you first of all head over to TradingView. That's the charting platform I'm using here. Once you're on TradingView, just load up whatever chart you're interested in, your favorite stock or crypto pair. Then click on the Indicators button at the top, and in the search box, type in Linear Regression Channel. You're looking for the one that was published by Chart Prime. Go ahead and click on that to add it to your chart. So this is the Linear Regression Channel indicator by Chart Prime. This tool draws channels and bands on your chart based on linear regression calculations. It's designed to show you the main trend, identify overbought or oversold conditions, and give clues about where the price is heading next. So, looking at the chart, you'll see these channels and bands. The main channel visualizes the overall trend direction. You will see the lower portion being red and the upper portion blue, giving you a quick visual on the general flow. Then you have the linear regression bands, which act as boundaries, showing where the price is considered stretched or overextended. It's overbought when it's up near the top band and oversold when it's down near the bottom band. When the price visits the lower band, sellers have lost steam, making it a good area to look for buys. Conversely, hitting the upper band means buyers are exhausted, presenting spots to consider selling. So what does it actually mean when price breaks outside these bands? That's when things get really interesting. A break beyond the bands usually signals a strong momentum push, like price stepping into uncharted territory. It's what traders often call no man's land, and it's a clue that a snapback into the normal range might be on the horizon. Right after this kind of breakout, the indicator steps in with a powerful visual cue: reversal diamond signals. Here's how it works. Let's say the price breaks below the lower band, and then you see a blue diamond pop up. That's the indicator telling you, get ready, this might reverse and push back up into the channel. The opposite is true when the price breaks above the upper band. A red diamond shows up, signaling potential exhaustion from buyers and a likely move back down toward the mean. These diamonds act like early warning signals for smart entries and exits. You'll also notice that the price bars themselves are color-coded. Think of it like a heat map, visually telling you whether the current price action is bullish, bearish, or neutral, depending on where it sits within the regression structure. On top of that, there are directional arrows that sometimes appear, thanks to a built-in projection feature. These arrows hint at where the price might be headed next, adding another layer of insight to your decision-making. Now let's take a quick dive into the settings panel. Just click the little gear icon on the indicator to get started. First up is the Inputs tab, where you'll see a section for bands settings. By default, Plot Linear Regression Bands is checked. This is what draws those outer boundaries we talked about earlier. Right beneath that, you'll find the length set to 150. This number tells the indicator how far back it looks when calculating the bands. Here's why that length matters. A longer length gives you smoother, broader bands. This is great for seeing the big picture. A shorter length? That tightens things up and makes the bands respond faster to recent price action. Next, you'll see the deviation setting, usually at 3. This controls how wide the bands extend. You can increase it to catch big price swings, decrease it to zoom in on tighter, more sensitive moves. Scroll down to the channel settings and you'll notice that Plot Linear Regression Channel is turned off by default. If you'd like to see that central trend channel drawn, simply check the box. Like the bands, this also has its own length setting, also 150 by default, and a deviation value, typically set to 1, that controls the channel's width and responsiveness. Then we've got the Future Projection Channel section. Both options, plot future projection, and plot arrow directions are unchecked at first. But if you want to see forecast lines and projected arrows, this is where you turn them on. These two come with their own length and deviation settings, so you can fine-tune how far and how bold those projections are. And if you're someone who likes a personalized chart setup, head over to the Style tab. You'll find plenty of visual toggles here, from adjusting plot lines and band fills to turning on or off bar heat maps, diamond signals, labels, and more. Once you've customized it to your liking, just click OK, and you're good to go. Alright, so how do you actually use this indicator in a trading strategy? One of the most effective ways is by identifying the trend using the central channel, if it's enabled, or just observing the slope of the bands. If the bands are sloping upward and price tends to hug or bounce off the lower band, you're in an uptrend. If they slope down and the price stays near the upper band, it's likely a downtrend. Once you know the direction, the bands become your tool to time smart entries. Now, let's go ahead and show some examples to see how this indicator performs in a real market conditions. So, for a bullish setup, you'll want to watch out for the price to dip down toward the lower regression band. This typically signals an oversold condition. But here's where it gets exciting. When a blue reversal diamond appears just after price touches or briefly breaks below that lower band, that's your signal that momentum is shifting upward. And you could have placed a long entry here, and as you can see, the price climbed back into the channel, hitting your take profit. Now, for a bearish setup, just flip that logic. You're watching for prices to rise toward the upper band, which usually indicates an overbought condition. Then comes the moment to watch closely. A red reversal diamond appears after the price touches or slightly breaks above that upper boundary. That's your early warning of buyer exhaustion. It suggests a short entry opportunity as price is likely to snap back toward the center of the channel. To make these setups even clearer, you have to keep an eye on the color-coded candles. They work like a momentum heat map, helping you confirm whether the shift in direction is gaining strength. If you want an extra layer of insight, you have to turn on the future projection channel and the directional arrows. These tools will give you a sneak peek into where price may be headed next, helping you better plan your targets or manage your stop losses with more confidence. So, in summary, the Linear Regression Channel Indicator by Chart Prime is a surprisingly versatile trading tool. It combines the math of linear regression with visual cues to help you spot trend direction and reversal zones with ease. You get the main channels, the oversold overbought bands, and the game-changing reversal diamonds. Add in the colored candles and the optional future projection feature, and you've got a well-rounded visual system that helps you stay a step ahead in the market. But here's an important reminder. A solid trading strategy needs to include your own analysis, whether it's price action, market structure, fundamentals, or other confirmations that align with your style.